Japan just broke the global financial system. You have 30 days. How is this going to play out? Is the carry trade unwinding? Is XRP truly going to play a role here? Let's jump into what's actually happening, give you all the news and the facts. And of course, we'll talk about the speculation of where this could go. This is just in. Japan just killed a global money printer and nobody noticed. The most dangerous number in finance right now is 1.71. The Japan's 10-year bond yield, highest since 2008. Here's why your retirement just got obliterated. For 30 years, Japan printed infinitely money at 0% rates and exported it worldwide. 3.4 trillion flowed into US treasuries, European debt, emerging markets. This invisible bid kept your mortgage cheap, your stocks inflated, your government solvent. November 10, 2025, the bid disappeared. Japan's yield hit 1.71%. They're pumping $110 billion stimulus into their economy, while the debt sits at 263% of GDP. The math just became impossible. At 1.7% rates, Japan pays $27 billion more in interest every single year. Here's the extinction event nobody sees coming. Japanese pension funds are pulling 1.1 trillion out of US treasuries right now because keeping money in America loses them after the hedging cost. The largest foreign buyer of American debt is about to become the seller. When Japan stops buying, interest rates don't stay flat, they explode. US 10-year yield will jump 40 basis points minimum from flow dynamics alone. Your 7% mortgage becomes 8. Corporate debt refinancing costs spike 60%. Zombie companies holding 3 trillion in junk bonds start defaulting in waves. The yen carry trade just reversed. 1.2 trillion in borrowed yen funding crypto stocks and emerging markets must unwind. Every hedge fund, every momentum trade, every leverage bet built on free Japanese money is getting margin called simultaneously. This breaks in 3 places. Stock valuations were built for 2% bond yields forever. At 3.5% yields, the S&P fair value drops 35%. Emerging market currencies collapse without Japanese capital inflows. Europe's debt crisis returns because Italy and Spain lose their silent buyer. December 18th, the Bank of Japan meets 50% chance they hike rates again. If they do, sell everything not nailed down. Your 401k doesn't price this in yet. The Fed can't stop this. No central bank can. The world's biggest piggy bank just cracked open and the money is flowing backwards. Position yourself accordingly. Obviously, if this is alarming to you, you need to pick up the phone and call your financial advisor and have those discussions. But let's explore how XRP could come in here to save the day. Jay Claver has made it his theory here to talk about this. I wanted to go ahead and give you the base of Jake's theory and how this plays out, as well as give you a ton of additional context after this clip. So if you've already seen this, fast forward to 7 minutes and you don't have to kind of re-catch up. And then I'm going to hit you with some new information that you must know.
$1 billion ticking time bomb sitting inside the financial system, and almost nobody is talking about it. Unless you've been here on this channel, and we've covered it lots of times, it's the reverse carry trade. And when it blows up, we're going to need something that doesn't exist in the current banking system. And that's where I think XRP might step in. This is about financial infrastructure, systemic risk, and why Japan, XRP, and the digital yen might be the only thing standing between global liquidity and a global crisis. Okay, so if you haven't been here before, we're going to go ahead and go over what the reverse carry trade is. For decades, global institutions have been borrowing cheap yen at close to 0 interest rates to buy higher yielding assets in dollars, euros, and other emerging markets. So they would borrow that yen from the Bank of Japan, swap it through FX to whatever currency they wanted, and then go put that to work, earning much higher returns. And then they owe 0% to the Bank of Japan. It's free money. And that is what the reverse carry trade is. It's close to $10 trillion in exposure. When rates shift or FX volatility spikes, these positions are going to unwind fast. Investors will have to sell off their foreign assets and rush to buy back the yen. So they have to sell in the stock market or gold or wherever else they're positioned, swap back to whatever the currency it was in whatever jurisdiction they purchased it, and then go back through FX to yen before they can repay those notes. So this slams the FX market, the bond market, and credit globally. all at once. So what's going to happen? It's not good, right? It's a tidal wave of capital surging back to Japan. Dollars, euros, and all of the other currencies that people are selling off to swap for the yen crash. And the yen will explode higher. Demand for the yen will be excessive. So US treasuries, they're going to be dumped. Yields are going to spike, and bond markets will break. Global liquidity will evaporate, just like in March of 2020, but much, much worse.
Really quickly here, if this does play out the way Jake is describing it, it would be a total collapse of each individual financial system. Collapsing the bond market basically collapses the US dollar, right? So if you think your dollar doesn't go far right now, if this does play out, it's only going to get worse.
The Bank of Japan will have two options. They can either let the yen appreciate and kill their exports, or they can defend the bond market and risk hyperinflation because they're going to have to print a bunch of yen in order to buy those bonds. It's a lose-lose situation, unless they have a third option sitting in the background. So this is where I think XRP might be the missing piece. So instead of dumping foreign assets directly into the yen, flows could be routed from, let's say, US dollars through XRP and then into the Japanese yen. XRP would serve as a liquidity buffer, routing flows around the FX bottlenecks. Settles in 3 seconds, doesn't require correspondent banking, and it could scale globally if price and infrastructure allow it. So let's get into what would actually need to take place for this to happen. You got SBI and the Bank of Japan. They would have to have strategic alignment. Now we know SBI is Japan's largest and most aggressive fintech institution, and they own part of Ripple. So they operate SBI VC trading, and they also use XRP for live FX remittance. The Bank of Japan is developing a CBDC, which has been in pilot since late 2023, maybe 24. And this would allow them to program the stability of the bond market. But they would definitely need a playbook for this. You'd have to route through XRP. You'd have to be able to issue or go live with that digital yen. You'd have to offer yield or rewards for people holding the bonds, and then absorb capital inflows without destabilizing the yen or bonds. Okay, so this is a tricky dance. It's not like it's an easy thing to do, but if you had a liquidity buffer like XRP that could expand and contract to be able to mitigate this risk and volatility, it's going to be much easier to handle this situation when it happens. So how could this work? Like XRP needs to have a couple things happen. For $5 to $10 trillion to be repatriated into the yen, you couldn't use traditional FX markets. They would break. You need XRP liquidity pools large enough to absorb and route those flows. So let's do some math. To absorb $10 trillion in 30 days with about 5.5 billion XRP, and if that was turned over 10 times daily, XRP would need to be around $180 per token. This is a mathematical inevitability if it's going to serve in this purpose. The world doesn't need XRP height, it needs XRP liquidity.
If it's going to serve this purpose, right? Is the infrastructure built out to support this? Is XRP's price even close to $180 to support what Jake is saying here? We're not quite there yet on any of those pieces.
For when this is going to happen. So let's break it down. What are all the things that actually have to happen for SBI, the Bank of Japan, and the rest of the world for this to take place? The Bank of Japan would have to authorize XRP in settlement systems. Okay, and we know that they've been building that in the background with Ripple for a long time, so probably in place. SBI needs to build deep liquidity pools between the yen and XRP and USD XRP corridors using RippleNet or the AMMs on the XRP, which were put out a while back with XLS30. So it's possible. You would also need regulatory clarity in Japan for XRP. It would need to be approved as a settlement asset, and also not have capital gains if it's being used in that capacity. You would need CBDC rails to go live with programmable yield to absorb the bond flows. And again, we know that that's been in pilot for a long time, so likely they probably have that in place. You would also need global partners to mirror those corridors for all of the currencies that we're going to be swapping back to the yen. So that's the US, it's euros, and any other jurisdiction where people have borrowed yen to be able to put it into financial markets. And then last, XRP liquidity would need to be locked, incentivized, and scalable. So we need a significantly higher price for XRP for it to be able to facilitate this. And again, there's a lot of ways that could happen, but you need a supply shock on the asset. If we don't have something like this in place and $10 trillion unwind, you have a credit collapse. you have FX disorder, and you have central banks out of tools to fix this problem. So XRP is perfectly positioned for this. It's neutral, it's fast, it's ready, but it needs the adoption, liquidity, and price to fit this purpose.
All right, now let me show you a few things here. Step one, carry trade setup, right? So we hear about the unwind, carry trade setup. Investors borrow yen, low interest rates. We kind of covered all this. They convert yen to foreign currency, profit or accrual position building, trigger Japan rate hikes. This is kind of, we're at step 3 here. Unwind begins, selling spree. So if you start to see this, you know it is happening in real time. Investors realize that holding foreign assets bought with borrowed yen is now riskier and costlier. Currencies begin to fluctuate and yen strengthens. Investors race to close out trades, selling global assets, stocks, bonds, and commodities. We started to see some of this in the stock market already, but we're still waiting for a few of these other things to play out. The next step after currency volatility and amplification. The sudden selling creates downward pressure on global assets. Markets may panic with major drops in US tech stocks and bonds. Simultaneously, everyone needs to buy yen, causing it to appreciate further. The cycle accelerates as more investors unwind assets, prices fall faster, triggering margin calls and forced selling. Knock on global effects, liquidity dries up in affected markets and investors repatriate to Japan. US and European bonds yields spike, mortgage rates rise, and emerging market currencies debt come under severe pressure. Banks and hedge funds are caught in crowded trades that may suffer sudden losses, amplifying the systemic risk. We already know the banks have a problem with liquidity right now. This would add even more trouble. Completion and reset. When the bulk of positions are unwound, the yen stabilizes at higher level. Asset prices abroad reset lower, sometimes overshooting due to panic. Global funding flows rebalance and credit conditions may remain tight for some time as the system absorbs the shock. All right. And so Jake's, this domino theory that Jake has kind of formed around XRP would go Japan carry trade unwind, global market shock, institutional pivot to on-demand liquidity, ETF dominoes and supply shock, which we are seeing the ETF thing play out right now, systemic rotation and price explosion. And so this would be the steps, right? And then also, Tether would need to collapse and all of these other things, right? And so I wanted to just research where the domino theory originally came from, when, who started talking about this and when. So this actually goes back to 1999. The yen carry trade as a strategy dates back to 1999 when Japan's interest rate were slashed to zero. So this is kind of when all of this started. Academic and financial discussions of the carry trade unwind began around 2008 in the global meltdown. Specific attribution, the very first person or institution used the phrase Japan carry trade unwind does not appear to be publicly referenced, but it was right around 2007 and 2008, much before XRP. So we kind of have set this whole thing up to fit XRP's narrative. Just wanted to give you some of the additional context. I would imagine there's probably going to be some other plans in place here, but I would imagine XRP is one option if all of this stuff actually plays out.
When do you think the reverse carry trade is most likely going to happen? I think they need XRP futures in place, and I think they need the ETFs lined up. I think all the dominoes need to be in place. The stablecoin bill is there. It could be passed very quickly. Tether has already pretty much moved offshore, but they've been told that they will be subject to the stablecoin bill and the US regulations. You've got MiCA in place. You've got the UK ready to go with their digital pound and the digital euro in the Eurozone. You've got all of these other large central banks ready to push their
digital euro won't be officially live until 2029. So that is not in place. The digital pound, that is not in place. The digital yen, that is not in place, right? All of these things are still in early pilot stages with this, the timeline and the schedule that they have is 27, 28, 29, 2030. So some of these things are not quite ready. And it looks like we're going to be going through some of this now. So what happens, right? Because you don't have these things.
Stablecoin and central bank digital currency, including the Bank of Japan. The Bank of Japan is ready to go with everything that they need. We're just waiting on oil to skyrocket. I don't know if that's going to come from a shortage or something that happens in the Middle East, but that will cause the Bank of Japan to have to hike interest rates very quickly and everything will kick off. That's going to
shortage in oil. There's a few things that could cause this, right? China has been looking to go after Taiwan. If that were to roll out and take place, that could create a massive shortage. If there's something that happens in the Middle East, that could create a shortage. Right now, they're actually overproducing oil by about 3 million barrels per day. So we haven't yet seen the shortage yet play out, but it could be a possibility here in the future.
To be the gunshot that I think is going to stir all this and make it happen. And it's going to happen way faster than people anticipate because everything's lined up, ready to go for when they kick this deal off. So I think after the 19th here in May, I think that's the last piece that they need in place is the CME in order to be able to hedge and profit off of this. You've already got the XXRP ETF, which is a 2 times leverage long futures XRP ETF. And then you've also got ProShares, which has launched their long and short XRP ETFs. No spot ETFs yet. I think all the institutions are on board. I think Jamie Dimon and Chase and JP Morgan are on board. I think HSBC, I think the BIS, I think the IMF, I think the Fed, I think the Treasury, I think the US, I think the BRICS nations. Everybody is green light, ready to go.
Some of it is green light. Some of it is ready to go. And of course, here, there's another clip, 37 seconds.
If you would go listen to my domino theory videos, I explain exactly step by step how the reverse carry trade would lead to the appreciation of XRP. Mainly, there's going to be huge unrealized losses on the back end of the stock market for the Bitcoin ETFs, and they won't have any other assets to be able to pull from to cure those losses. At this point, Bitcoin for sure has systemic risk because of all the pension funds and other hedge funds and large wealth managers and other people that have made large allocations.
All right, and then the last but not least clip here. Let me play it.
We've described the reverse carry trade many times and how it could happen by the end of year. But if it doesn't in that time frame, do you believe it's still in play in 2026, 3 to 4 digits? Thanks. Yeah, for sure. I don't know how much more confident I can show you guys I am. We've got 4 months left, September, October, November, December. A third of the year left, and everybody's losing their minds that it hasn't moved past $3 yet. And it's not going to be a gradual thing. When this thing goes, it's going to be a vertical line to the upside because of the supply shock that's going to happen. One of the things I found out at SALT that I thought was very interesting, but one of the ETF issuers that would have had lots of conversations with the SEC for issuing ETFs because they've, filed multiple S1s for multiple assets, mentioned that futures markets need to be live for at least 6 months before the SEC is going to approve the ETFs. So that makes sense for a lot of the delays that we've seen. They felt like Litecoin ETFs would probably get approved first, then Solana, and then HBAR, and then XRP later in October. I don't know that I'm super confident in that exact order and time frame, but they did say that October is when all of those futures markets would be around for 6 months, and those things would probably get passed. So again, I haven't issued an ETF. I haven't talked to the SEC about it. This person has had numerous conversations with the SEC about it. So I'm going to take their word for it. That makes sense to me. And again, all of these futures markets, even if they were launched on Coinbase and not the CME, they count basically. And so with that said, do we have to wait till October for the XRP ETFs? Possible. Do we, top out and then pull back and go into the bear market before they roll those? Possible. We'll see what happens. But with the rate drop here in the US on Polymarket looking like it's an absolute certainty, and also the Bank of Japan looking like it's going to raise interest rates, that reverse carry trade that seems pretty likely that it's going to unwind at scale in the not too very distant future. It is an inevitability.
All right. It is an inevitability. And it says Japan just broke the global financial system. You have 30 days, November 18th, 2025, Japan's 20-year bond yield hit 2.75, the highest recorded in history. This single number just ended a 30-year era that made your retirement possible. The math is simple and it's fatal. Japan has 263% debt to GDP, $10.2 trillion total. They survived because rates were zero at 2.75. Debt service explodes from 162 billion to 280 billion over 10 years. That's 38% of the government's revenue consumed by interest alone. No nation in history has sustained this without default or hyperinflation. But here's what kills your portfolio first. Japan holds 3.2 trillion in foreign assets, 1.13 trillion US treasuries alone. They bought everything forward because Japan's bonds paid nothing. Now Japan bonds pay 2.7% after hedging costs. Holding US treasuries loses money for Japanese investors. Repatriation is not optional. It's mathematically a necessity. 500 billion exists global markets in 18 months. The yen carry trade holds 1.2 trillion in borrowed yen funding global assets, stocks and crypto and emerging markets. Everything as Japanese rates rise and the yen strengthens, every position goes underwater and force its liquidation. Wow. We are at an inflection point. All of this is playing out right under our noses as we are distracted with everything else under the sun. The current financial system is ready to collapse. Are we ready for this new crypto era? That's a great question, right? Are we ready? We're gonna find out really quickly, right? Regardless of if this happens today, in 30 days, in a few months, we know that XRP is going to serve a massive purpose. Some of us are underestimating how massive that can be, and some of us maybe overestimating how massive it can be. Regardless, it's gonna be a great ride, and I'm here with you. So let's go through that together, and I'll keep you updated. Let me know what you think, guys. I know this is a little bit longer of a video, but there's things going on. At times, they are a changing. XRP. Let's see how it goes. Peace.